All right, time for me to blow some of your minds. This is the most basic form of a cycle analysis that I have. Personally, I use 4 variables to derive my reversal or aka turn dates that I have. This is the most basic version of it. Still, it's very, very useful. But as we go on through the months and as I give you guys more and more content, I may start to share some of my other timing variables, because those are very, very important ones, and I only want people that are serious, truly serious about my work, to have access to those potentially in the future. But for now, I'm going to give you guys a little glimpse on what I use. So the first one is a 17-day and 34-day cycle that I have. So this is also known as harmonics. You may have maybe heard this one. This is not that popular, and I'd rather keep it that way, so kind of keep it to yourself in a sense. It's not that popular on Twitter and stuff, but it is this green, these green circles they have down here. And basically these are every 17-day and every 34-day cycles that tend to have a very good idea of when we can bottom and top for a current trend. So for example, we had right here back in June, we had a big downward trend, clearly a downward and bearish trend, right into June 17th. You can see here, we are right in the middle of my green circles. So you may think, okay, cool, you could have just started it right here, right? Okay, now let's go back to the one previously over here, May 2nd, roughly. Look at what happened here. We had a bearish trend from all the way up here, all the way down into the 29th of April, 2nd of May, around that range. And look what happened. We had a reversal, 3 huge days upward. It only was 3 days in this case, but it was 3 very, very big days. We went all the way up from 4,060 roughly, all the way to 4,300. So that's a lot of points that we got straight up from that. That was 250 roughly. So that's a big upward move. Also, convergence with this big circle that I have right here. And by the way, I will go into what the smaller circles are. That's the 17-day one. But the big one is the 34-day, which is what I'm sharing with you right now. So you say, okay, that's interesting, Ben. Let's see another example of that. Well, we'll go back to March 11th to 12th. That was March 11th to 14th. This was a weekend. And you can see here, we bottomed. Perfect double bottom on the chart, matched with this right here because it's the middle of the circle. And look what happened right after. Boom. Huge rally right off of this line. Just massive rally that we had upward right off of this 34-day cycle that we have. And then we go back here. Look at, did it again. 21st of January to 24th. That's the time period of this, because there's a 2-day error roughly of this. And huge pickup candle. A massive pickup candle. We had consolidation after, but it didn't matter. The trend was already up, continued up, and squeezed up for the next 4 days after this consolidation here. But this upward candle in itself, this went from 4,218 roughly to 4,400. Yeah, it's almost 200 points in a day. It's crazy. So really big up day all the way back here. And this was also brought to you in part by this cycle that we have right here. So you can see already, this cycle has been working very well throughout the year so far. This is a 34-day, at least the big green circle is. Now I want to bring to your attention the smaller ones, and these are a little bit less accurate, or at least they don't have, it's still a precise time range of 2 or 3 days roughly, but they don't have as much of an impact as the big 34-day cycles have. But still, they are very impactful. So we can go over here. This is one that's a good example of it. We saw the big bounce over here, which was also, by the way, a convergence of both the 17-day and the 34-day, both at once, which was right here, which is our perfect low of the year so far, June 17th. Funny how that works, because I already had this charted before. And then secondly, you can see here when it's 17 days after that, we had another low, because we were bearish going into this date of the July 14th here, and we had another low right smack in the middle of these circles right here, and then it rallied straight off of that. Now, you can see that we did actually reach another convergence of both of these 17 and 34-day cycles on August 8th. Where we actually had some form of a pullback. It was only 2 days. This one didn't work as it has worked in the past, and that's mostly because this was during a short squeeze. It was a very, very strong momentum that was pushing price to the upside, because we had a lot of shorts that were from down here. Because remember how many bears there were back in July and June? It was a ton of them. A ton of those bears were getting squeezed out. So this cycle, I guess you could say technically worked, but it was only a day, so I wouldn't really say it worked, because I like to see 3 or more days. It could be even as basic as 3 days here for 250 plus points. But We really didn't get that much of a reversal off this. So again, this is not something that works 100% of the time. Nothing in the market works 100% of the time. But as you saw earlier with what I shared, it's pretty consistent and it's at least something to watch for. And this could be for anybody. You could be a day trader and you can look at this and watch for it, because you could know that there could be a potential reversal to buy the dip or short the top of the day. And also if you're long-term, same exact thing applies, because look at this. The low of the year so far, June 17th, you could have rode this rally straight up and you'd still be up on your position if you took it off of here. So very, very important cycles to chart. And again, this is the most basic form of a cycle. I know some of you guys are probably have never seen something like this in terms of cycles. Maybe some of you have, but not many people are familiar with this. Think about it. This is the most basic form. If you see my other variables that I have, they're very heavy math based on some of them, with actual calculations behind them. But this you have to understand first if I am to share the other ones further out into the future with you guys of what I use. But you can see here, this one didn't really work as well, continued up a bit higher, and then we fell off of that. And then you can see this minor form of a reversal didn't work over here. So again, this isn't 100%. It's worked pretty well in the past, but it didn't really work as well in terms of the last two cycles. But look at this right here. Something very interesting is the 21st of September. That is also a convergence with my reversal date. That's not the only reason why I have it. There's also other variables, but 21st of September and also 26th of September, this range is a very prime reversal range, which I've already shared with you guys in the private Twitter that I have this mark. It could be between the 19th and 21st. I know that's a wide range, but it's because this 17-day cycle is a bit stretched out from my other variables that I use for the 19th, but look for a reversal of some form throughout this time. And also, we're going down into the 19th, 20th, and 21st as of now, so that reversal will probably be to the upside based on here. However, if we did go up into one of these dates, then you would look for further downside, which ideally would happen going into the 26th, and then we'd bounce off of the 26th going forward into October. My ideal setup is having some form of a minor bounce early this week, and then we actually end up falling off into the 26th, which the 26th and 27th are my main days so far for a potential reversal. Now, I don't know the exact way the price is going to go till then. I can only assume with my bias that it will be to the downside going into this 26th date with a potential pop-up above, but I'll let you guys know. This 26th date, very, very important. All four of my variables converge on this 26th date, so very important to watch this. You guys saw me nail the low back in June 17th. This also had four of my variables all converge. Remember, this is only one that you're looking at right now. I had three other variables that converged on this day to get me the best time. Also, this one had three over here for a big reversal off here. If you remember, I caught the squeeze before it started up. So this is another important day, the 26th of September. And also, don't forget about the 21st either. These are both important days. So very volatile price action. Expect that. And also, we have events like FOMC this week, so you're going to see volatility anyway. So very important cycle analysis here. I have done a ton of work into my cycles, and this one is the basic form of it. There are many other ones. I've done back tests of every single variation you can think of. That's what I do with my free time. You can consider that to be boring, but like I said in the video earlier today, it's worked out so far. But this is cycles are very prevalent in the market, not only SPX. You can see it just in the general markets, also in crypto. Cycles are very important. So there are some cycles that the market likes to follow, and you can get a pretty good idea of when reversals can happen based on those. But I know you guys will like this video. I don't even have to say, I hope you guys appreciated this video. I know you guys will like this video because it's a lot of alpha, I guess, probably open your eyes to potential of the market. And also, this is, like I said, one of the variables that I use of many. And you can probably start with this baseline knowledge of this cycle. You can start looking and back testing for your own on top of what I just shared with you today. So hopefully opening up the doors at least for you guys through this video. And ideally, we have a very profitable week. Looks like a lot of volatility coming up here, but looks like a lot of potential in the future. Just be patient. We'll get our good entry, and I'll see you guys tomorrow on Monday for a great market week.